Ladies and gentlemen of the crypto space, we're live on a Monday, August 22nd at 11:28 a.m. So, as I said on Twitter, this is really a good stream. This is going to be a good one. This is an overview of years of my experience. And the title of the stream, Global Dollar Shortage and Two Charts, There's No Liquidity. So, over the last couple of years, we've gotten into macro, which makes sense. And, there's persons that will only think of macro from a particular perspective, from the crypto space or from equities, but what's pertinent is its significance really from a political, a humanitarian perspective, what it means for society, and it's all connected. That's the biggest takeaway that I have. Um, Everything is connected, and it comes down to there's real people underlying every chart you look at, every piece of data, every move of a dollar. There's intentions, there's hopes, there's dreams, there's goals, there's aspirations, there's desperation. This is a complex system, and these charts are a manifestation of the average market actor. And we barely get a glimpse of how complicated the system is, but we know a couple of truths from the high level. And the truths are scary, and they give us hints at what's going on right now. They give us hints of the way things are possibly going to head. And the hints have bullish and bearish overtones. So this chart looks nice. This is an inverse head and shoulders. It looks like we had an absolute catastrophe of price action to the downside. But we have a higher low relative to a couple of years back, the end of 2020. We have an inverse head and shoulders thus far. Bear in mind that could be invalidated. We're looking at literally a micro technical for like 2 seconds, but the point of this chart is that it looks decent. It looks supportive, and this is on the defensive. So this isn't bearish. This is so bullish is, for instance, previous resistance flip support. Bearishness is resistance holding as resistance. That's full on bearishness. As support holding as support is on the defensive, and this is kind of like support holding support. And we're hopeful that this massive formation is indicative of a bottoming pattern, that the average market actor engaging in this market says, I don't want it to go down anymore, and they find the price point enough to encourage them to enter the market. Embedded in this chart is hopes and dreams, aspirations, goals, and certainly desperation as well. So I like this chart. I consider this chart the chart of truth. It tells us a lot about an emerging market, a financial system, a digital financial system that has all these hopes and dreams embedded in it. So I look at this chart a lot, not only because I'm personally invested in it, because I understand what it is, and that's why I've personally invested in it. It's a significant chart of macro proportions. So, what did I say earlier? We look at this charts, we look at this data to help us make choices and decisions, but they're really very meaningful pieces of data that tells us a lot about people and societies and political systems and anger and frustration that is exerted at a political level. There's a war going on right now. It's a full-on war, a financial war. And that's what I said literally when Russia started their activities. The Fed started doing what they did in November. It's so silly to think of what they did as something, gracious, and they're helping the American people. They're going to bring down inflation. It's for the good of the people. No, this is a financial war. This is a global war. And we see that in this chart. And this is what I've learned over the years. You don't see the dollar do this. You don't. An emotional chart watching the dollar do what it's doing this month after what it did last month. These two candles right here indicate extremity. that for a period of time at the end of last month, countries hoped they had their debt burden under control, that they could service their debt, that economies were capable of generating enough productivity to purchase enough dollars to pay their dollar denominated debt. But in this one chart, that didn't occur. Maybe trillions of dollars worth of monthly debt servicing all of a sudden was realized was needed. And all of a sudden, tremendous amount of dollar buy pressure occurred. This is an unhealthy chart from a global financial system perspective. This is so much pressure on a single country's currency, the dollar. You don't see charts do this. This could either be the start of something catastrophic or the most incredible tweezer top in the history of this chart. The last tweezer top we saw was back in 1985. Now, I don't know the story behind that, but holy crap. You can imagine if this chart that we're looking at right here, or at least where the price point is currently on the DXY, is doing what it's doing to the global financial system, you can imagine the stress that was occurring on global financials back in 85. Now, I don't know. And I would like to know, and I could do my research, but I'm not going to do that right now. The point is, everything is relative, and man, it must have been a shit show back then. Because take a look at this. Here's your confluence. When you see the dollar do this, and then you see yields on treasuries rip to the upside also, when you see a correlation between the DXY and the dollar, it means U.S. government treasuries are being sold. And they're being sold to raise dollars because dollars are needed to pay for debt. They're needed to pay for things that are bought and sold around the world, dollar denominated. If you want to buy a gallon of gasoline that someone's selling in dollars, you need dollars. So if you have euros, you first have to buy dollars, then buy the gasoline, which is being sold in dollars. So the whole world decided to fucking price everything in dollars. Jesus Christ, what a mess. Like, yeah, let's price everything in frickin' dollars. Bunch of geniuses. They dug the biggest pile of tech debt that I've ever seen. And the whole world is a catastrophe because of it. Everything was dependent. And they gave the U.S. so much power that if they raise rates, how are you going to pay your debts? If the dollar strengthens 20% against your local currency, you got to make 20% more money in your business to buy the dollars because your currency is that much less powerful. You have that much less purchasing power to purchase the dollars to pay the debt that you took out in dollar denomination. Holy crap. Everyone literally bought into this. What a tragic state of global financials. So, this is a very precarious position for bonds. I mean, this line right here, this is a 41-year trend line. And it broke it once, it broke it twice. There's some massive head and shoulders. There's so many things that could be argued from a government perspective of what their goals are, what their intentions are. And in large part, I would say they probably hope for something to fucking break, raise rates until some economy completely collapses, risk gets destroyed, and everyone around the planet has to buy the safest thing on the planet, which is probably going to be, as it historically has been, U.S. government treasuries. Why is that what the government wants? One, it gives them a capacity to offload their balance sheet. If everyone's buying treasuries, the U.S. gets, a reset. The Fed gets to sell their stuff, their shit that they have on their balance sheet. They get to sell it to the rest of the world that is so happily purchasing it because everything else is getting frickin' annihilated. What a horror. And then to top it all off, the reason why they want everyone around the world to buy our debt is because then Congress can pass a $10 trillion fiscal bill. Treasury could print the treasuries, and the rest of the world could buy it and give us the $10 trillion that Congress so graciously asked for, that the rest of the world said, here, United States, here's the money that you asked for, go spend your money. So that may be the most obvious effect of a risk off, that when we see stuff like this and bonds get purchased hand over fist, the world's buying it. They're buying our shit. They're giving us cash. So that's what they want. They want something to break. They buy our shit. The Fed unloads their balance sheet, gives Congress a capacity to enact a large fiscal bill, and it gives them a bunch of cash to play with because that's what they all love. All right, so there's my rant about macro financial conditions because the dollar decided to holy shit, 109, 109. Holy shit. It's hard to smile with the chart doing what it's doing. Holy shit. Listen, if this chart, I mean, it already was, it was like a buck 08.2 this morning. I don't know what the open was this morning. It was like a buck 08.2, and it's already up to a buck 09. If this thing, if you see the DXY break this trend line started back in 2005, there is very much rational reason to be worried. Worried about risk assets, dollar denominated price points, worried about inflation, worried about social stability at a nation state level and a capacity for the exchange of goods and services around the world, because this is that would be a massive indication that something is really wrong. You don't have rising wedges break to the upside, especially on a currency chart. This is Europe. I mean, this is predominantly euro actually. So, but the and Japan, which is and Japan has its own complexities, but their currency is in a shit show because of the yield curve control. But Europe has its own complexities because it's not really a central bank currency. Is the insanity of the nations in Europe issuing their own debt, so the central bank has a very different role as compared to the Japanese central bank as well as the Federal Reserve. We all have our own burdens, but this chart indicates that there is significant stress on global financials. If there's a trend breakout to the upside, there's reason to be worried. Now, you guys are going to have a lot of questions. More than happy to hit on all of them, as always. Now, what does this all mean with regard to my personal activity? What does it mean with regard to the optimal way to engage with markets? Nothing changes. Nothing changes. You got rules. You follow the rules. You buy at a discount. If something's at a discount, sure, go ahead and buy it, which means you have to have cash, which means you can't buy everything. You can't spend all your money, which means you have to have savings. And this is something our parents taught us when we were 5 years old. You get a paycheck, you spend half of it, you save the other half for a rainy day. Now, over the last several years, we've been bombarded with this cash is trash, this large part of the Bitcoin narrative and it's going to hurt more people than they want to help. Now, I appreciate the Bitcoin narrative, but it's something that I want to help avoid people getting hurt by. You need cash to buy things at a discount. If things are cheap, they're to be purchased. And what things are cheap? And this goes into our rigorous methodology for identifying things that should be bought when they're cheap. This plays into survivability, cash flow positive, productive enterprise, something that's actually meaningful and has a good chance of doing well, at minimum surviving. So those are the characteristics we look for in crypto assets. Those are the characteristics we look for in equities. And I've mentioned some equities every now and then. But as I've said, I find the most opportunity in the crypto space. Interesting reality. You have the macro folks, they talk their stories, and I listen to them because I appreciate them and I understand them, and I tell those stories to you. But crypto's so not on their radar. Like, look at this chart. I absolutely love this chart. And they don't appreciate it from a macro perspective, the significance of it, what it means from a technological, what it means as a technological achievement. What this chart means is profound. This has never been done before. Jesus. Oh, my hair got me frustrated. These two red dips tell such a story. These lines, let me highlight it. This and this are so extraordinarily different with regard to their significance, the story they tell, what it means. And I feel bad that a lot of folks, macro folks, just dismiss it. Well, I appreciate it, folks, and I appreciate all of you, and I hope we're able to do better. And that's the whole point of all these stories, is that we really should have an opportunity to do better. And I think our rules will help us do that. Buy productive assets at a discount, buy cash flow at a discount, buy assets that have a survivability characteristic at a discount. Now, one, base case. Your base case must be that the asset's price will go down. You expect it to go down. You're going to buy it as cheap as you can, but you expect it to go down. Why? Because one, if it goes down, you expected it to go down. And two, if it goes up, holy shit, you expected it to go down and it went up. You know what that's called? That's called a win-win. You expect it to go down, it goes down, you win. You were right. You expected it to go down. But if it goes up, oh, you made money, you went up. I love that shit. So set your expectations so you're always winning. If you expect it to go down, which means there's more discount, which means you can't spend all your money. Now, I don't have the answers. What I have is the rules. The rules are based on rationality, what makes logical sense. You know whose rules are a good part? A good part of the rules that I define are based on Warren Buffett and George Soros, reflexivity. Look at the action and activity and growth of these assets. These, well, few assets that I focus on are the reflexive assets. Incredible the amount of developers that aren't just building this protocol. They're building other protocols, countless protocols that are built to interact with this protocol. That's crazy. That's not trivial. It's not to be dismissed. It's to be understood and appreciated for something significant, something profound. Why? Because humans are doing it. Countless people are doing it. And we shouldn't dismiss what other people do, because they're real people with hopes and dreams and desires and ambitions and fears and desperations. Oh, we see all these charts on Twitter, and I don't like it when people are marginalized. I don't like to marginalize people. I like to think everyone's important. Anyway, let me answer some of you guys' questions, and hopefully today's rant gives you some insight, some guidance, some stability in this irrational time. The only way to make it through an irrational time is with rational ideology, methodology, rules that are protected and fought for and rigorously executed. MF Income's in the house. Pepe, what's your opinion on Dopex and Tokamak? Tokamak needs more of a federation, at least the last time I looked. It's just they're off my radar. Um, Dopex, Tetranode project. Hopefully, I was just it's off my radar. You can't own everything. And just because I don't own something doesn't mean shit. In our Discord forum, our rational Discord forum, folks are dabbling in plenty of different things for very rational reasons, but they focus on the core narrative of rationality and doing things for the right reasons. So there's people that mention Dopex. Just because it's not on my radar doesn't mean much. Hey, Rupert, how are you? Tap C next week, Tuesday and Thursday, boys. Boy, we're lucky to get one Monday. Yes. We'll see what else I could do this week. I'm going to try my best. Yeah, the streams will proceed intermittent. There will be probably at least two per week. If I get three, I'll be very happy. Kazan, as a European, I'm very comfy with my dollars. Yeah, but how is the other folks that have no idea of anything but a euro? And that's the problem with the system. Now, you're going to outperform because you have been educated about the realities of the dollar and Forex and global financials and the Fed policy of what they're doing and why they're doing it. We should feel bad for people that just don't know any better and just have a bank account and will be completely controlled by CBDCs and don't listen to very meaningful social media personalities. And one of them that you could probably recommend to anyone is George Gammon to help explain a lot of these macro concepts in the three simple, easy steps. Zoidberg, morning. Hilda's in the house, a pleasure. Loki, love your work, Noah. Always grateful for your insights into the broader aspects of the forces moving the world. Today was a pretty good rundown. Raul, hello. Loki, sounds like we wanted to leverage into another reserve currency, maybe a decentralized one. Anyone who thinks Bitcoin is the next reserve currency, they are so far off base of anything remotely rational. A reserve currency is opt in, it's the choice of a nation. Why would anyone opt into something they can't control? I just don't see it as being even remotely reasonable, at least in the short term, at least without a couple of wars. Anyway, that was me just daydreaming into a thought experiment, but I don't want to go too far into that. But I started collecting decentralized water. Now I think that is starting to sound very reasonable. You're very welcome, Wilkie. Sir Joe, President, accounted for. Joe, can Fed do something? Yeah, can the Fed do something? Yeah, they're going to raise rates and continue to pillage every other currency on this planet until the rest of the planet capitulates into buying all the U.S. treasuries that the Treasury could print, such that this chart goes down and it gives the Fed a capacity to offload some of their balance sheet, get them down to $4 to $5 trillion. It gives the Congress a capacity to print a large fiscal bill, and the rest of the world will buy it. So that'll satisfy what the Fed wants to do with regard to its balance sheet and what Congress wants to do with regard to fiscal policy. That is their goal. Doesn't make any sense for anything else to be their goal. Ron, sir, I thought EOS longed ETH was up 30% of the weekly. Thoughts, please. Long positions mean you're betting something's going to go up, or short position, you're betting something's going to go down. If you could get a long position and capture 30% profit on a trade, excellent. That's called capital gains. Now, capital gains is an adversarial system. You are betting someone else is losing, and that's okay. We talk predominantly about ownership, more of a Warren Buffett type mentality, methodology for engaging with markets, but the whole market ultimately is adversarial. Us owning the infrastructure that other people are engaging with in adversarial activities so we could collect rent, because that's what we're doing. That's okay. So if that's your forte, taking capital from someone else, because that's what a capital gains is, that's okay. So if you capture 30%, kudos. That's a very nice gain for a couple of days. Crypto Jake's in the house. Joe, George Gammon is great. Yes, he is. Avi, thoughts on Taiki's theory about Arbitrum being a healthy ecosystem over optimism could impact the SNX versus GMX play? Well, nothing's verse. This is all a collective progression of activity and events. GMX, obviously, Arbitrum and Avalanche, Synthetics, Optimism, and Mainnet. This is all good. Um, I don't know which one is better or worse. Those are not appropriate ways to describe those protocols. There's pros and cons to everything. There's good attributes and bad attributes. There's risks, so on and so forth. What I would say about both of those assets is I would size them smaller than other parts of the portfolio. There are other things that we look at that are larger in scale and scope. Options and derivatives and synthetic assets, they have a massive scope and potential. But guess what? Even a synthetic asset needs to be exchanged on a Forex market. So there's one narrative to rule them all, and that's the Forex market. Crypto J Captain, don't we want to inflate away the national debt? No. Want is a strong word. I think the appropriate way to frame that is need to. In order for the financial system in its current form, with its current debt load, without avoiding a debt jubilee, which has a variety of implications, you need to inflate away the debt. Otherwise, how is it sustainable without a deflationary impulse where a huge amount of debt collapses, which means businesses are gone, capital is destroyed, large swaths of the global financial system go bankrupt? You have to inflate it. And now you're just talking about Lou Groman's type of ideology. And I would say every one of these profound macroeconomists or their profound theories that each in their own right has merits, they all pretty much say the same thing. Like Brent Johnson and Luke Groman, their banter back and forth, they're basically saying the exact same thing. And if you look through a lot of their commentary, they're just probably arguing over timing and order of operations. That's it. So those two are great. And look, this is straight up Brent Johnson territory. All currencies are gone. Unless the Fed allows other currencies to exist, this is going to collapse nations. If this thing goes to 120, how the fuck is that'll be another $10? It'll be almost 8%, let's say, or whatever it is. That means if a business in Europe has dollar debt and they make their money in euros, that means they have to make 8% more euros to buy the dollars to pay their debt. Not because their debt, so their debt went up in cost because of the conversion rate. That's how devastating this chart is. Small moves on this chart have significant impact on hundreds of millions, billions of people. This is a devastating chart. So we can also see the mother of all bull runs with regard to risk assets. Think about this. If this gets topped out and it doesn't reach a higher high, and somehow debt servicing capacity around the world stabilizes for a year, and this is what they talk about with regard to cycles. Everything operates in cycles. Everything stabilizes for about a year. Somehow China avoids some sort of systemic implosion in the real estate market. I don't know how the hell they're going to avoid that without doing exactly what they're doing: cutting, 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 and fiscal, 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 which is basically printing, which is basically inflating over the problem. And they're bailing everything out. So that's what China is literally doing right now. So if everything stabilizes and somehow the dollar demand isn't there because everyone, their businesses pick up a little bit, somehow everything stabilizes, the dollar retreats, everyone wants to buy euros because Europe somehow stabilizes given all their energy shit show right now. I don't see how that's the case. Then this retreats. And there's 9 days left. If this thing prints a double giant tweezers, that would be very indicative of some sort of topping pattern, which could mean we could have a period of stability with regard to global currencies and forex pressures. In which case, this is what happened during the last two bull markets in the crypto space. This is everything. This is your Bitcoin to 20,000 from a couple $100. This is your Bitcoin from $3,000 to 60 whatever $1,000. This purple box right here. So if the dollar does a little bit and retraces down to 98, you're going to have one heck of a monster rally in the crypto markets. It's going to be massive. But then from a technical perspective, if you see support at 98, that is horrible from a technical perspective on this chart, and so indicative of pain to come induced by dollar strength. This chart tells an entire story. We could speculate where it's going to head over the next couple of years. But every second of every day that this thing ticks away, it tells a story, and we're hanging on by a thread. Meaning it goes in one direction, it's one story. It goes in another direction, it's a completely different story. But we don't know which particular direction it's going to head. So we watch this chart as a chart of truth. And I also watch this chart as the chart of truth because this chart has so much liquidity and it tells such a profound story from a technical perspective. The amount of inflation that's consumed the Federation, this chart has overtones of a reserve currency. I don't need anyone from a macro land to tell me that. This country, this country, this country, this country's currency is placed in reserves. This curve is placed in reserves by protocols that are mandated by wanting to survive. Protocols need to own this to survive, so they purchase it, which is a reserve. Obviously, it's metaphorical, but the point is, that's the metaphor, and that's very meaningful. All right, last couple of questions. We'll wrap it up. Hey, Noah, are you still answering questions on AskFid? AskFids is done. I'm pretty sure I removed it from my Twitter profile. I just want to make sure real quick. Yeah, there's no more AskFids, guys. Sorry, I pretty much I canceled everyone's subscriptions quite a while ago. So JJ, ping on Twitter. Discord. Discord is probably the best place for questions nowadays. Albeit one-on-one is still there. I might actually just pull that down as well. I just don't necessarily have the time. But if you go to noahseidman.com, maybe. I'm trying my best. Good afternoon. Joining lately today. Dan's in the house. A pleasure. Eitas reviews. What's your opinion on Chinese mortgage crisis? How it may affect global markets? Well, Chinese mortgage crisis is a catastrophe in the making. They're bailing them out using a BB gun or using a garden hose against a 5-alarm blaze. If you bail it out 50 bill at a time, there's 5.5 trill worth of shit on the books. They have. I've posted retweets of their social media trying to actively encourage people to buy second, third, and fourth homes. It's a catastrophe in the making. And the contagion it would induce would be mind-boggling. Imagine a massive deleveraging of yuan. It just becomes cheaper and cheaper and cheaper. And then they need the dollars, so they're purchasing dollars, dollars, and dollars. So the price of dollars goes up because it's being bought from the market, and that's how. So if there's a big boom there, meaning if something explodes in Chinese real estate, what do you think happens to this chart? 112, 115. What does that do to Europe? What does that do to their capacity to service dollar denominated debt? And boom, cascade of liquidations. Well, okay. The ECB starts to cut rates and starts to print euros. What do they do with the euros? They buy dollars to service their debts. So they stop the contagion. But by stopping the contagion, by printing the euros to buy the dollars to service the debts, all right, 117, 118, 120. Oh, there goes every single African nation. Bye bye financial, bye bye currencies. And that's how you get this growth of the dollar. This chart is not just a chart. This is literally the state of countries, the health of countries. This is a profound chart. It really is. Let's wrap it up. Thank you all for joining. Monday, August 22nd, 12:03 p.m. I guess good takeaway from this stream is that we have this very complicated story we tell from a macro perspective, but we follow the rules. The rules are irrespective of the situation. Clearly, if something is going up, you trim off because you need cash. You need cash. You can't spend all your money. You got to save. You got to have cash so you could buy when there are discounts on assets that are productive, that have survivability attributes. You know, Messi said it nicely on Twitter the other day. When times are good, you sell. When times are bad, you buy. Everyone knows that. And times are rough right about now. This is time for buying. This is not time for selling. The problem is it's not just time for buying. You got to wait for more and more discounts, and you can't spend all your money. So when you need to learn is healthy portfolio balance, which is really a balance sheet, and management of the capital in it. It has to become more than just a bank account, more than just the dollars in your pocket. You have to think of it like a business operation. You have to complexify your financial life. I hope that helps everyone. Thank you everyone for joining. Tell everyone to subscribe because we can only help someone if they listen. I wish you all a wonderful day. After party on Discord for the most rational community in the entire crypto space. I will see you guys at least one other time this week. Peace.